Hey YouTube, I'm Jimmy. In this video, I'm going to go through the advantages and disadvantages of investing in gold and silver, the best way to invest in them, and which is better, gold or silver from an investment standpoint. So in a recent video I published, a question came up about investing in gold and silver ETFs. And although I know a decent amount about gold as a hedge and a pretty good understanding of how gold as a commodity is traded, I realized that I don't know a ton about gold or silver ETFs, and probably not as much as I could about gold or silver itself. But as luck would have it, I happen to know one of the world's leading experts on gold. His name is Will Rind, and I've known him for a few years, and I know him because he started a company called Granite Shares. They manage a few ETFs. The reason I thought of him when I was prepping for this video is that one of those ETFs is called the Granite Shares Gold Trust, ticker symbol BAR. Now, his ETF is very similar to a SPDR ETF, which is called the SPDR Gold ETF. Ticker symbol there is GLD. GLD is the largest gold ETF in the world with about 30 billion in assets. So what's interesting about Will, and one of the reasons that I turn to him when I have questions about the commodity markets, specifically gold, was that Will spent 2 years as a CEO of GLD. So clearly, he's one of the best at this. Okay, so now let's kick it off with the first question. If we want to invest in gold or silver, what's the best way to do it? Is it in fact ETFs? Why don't we just buy the commodity itself? Well, let's say we would go ahead and we would buy the commodity. Let's say we would buy gold, a gold coin or a bullion or a gold bar, whatever it might be. Well, the first thing we're going to have to do is we're going to have to store that. How are we going to store it safely? Do we put it in a safe, maybe a safe deposit box? Do we stick it under our mattress? Either way, there's going to be a cost involved in storing it, or at least storing it smartly. But the biggest reason that we don't want to buy gold itself is the pricing you would get. So when you go ahead and buy gold, and let's say you buy gold coin from wherever you buy it, some reputable store online, well, they're not going to sell it to you at the current spot price of about $1,250 per ounce. They're going to mark it up so that they can make their money. And now let's say you want to sell it back to them. Well, when you sell it back to them, the same issue. They're going to mark it down. They're going to pay less than the current spot price. So you get hit twice when you buy and sell it. So if we're going to buy a gold ETF, what do we get and what's the risk? And the same would hold true for silver, but I'm just going to focus on gold for now. So the two ETFs that I narrowed it down to was BAR and GLD. And functionally, the two of them act very similarly to each other. When you buy a share of either of those gold ETFs, you're buying 1/10 of an ounce. So 10 shares is the same as buying 1 ounce of gold. Now, when the ETF gets money, when you invest money in the ETF takes that money and they go ahead and they actually buy the gold and they store it in vaults in London. They store them in different vaults, but either way, the concept remains the same. You buy the ETF, they take that money, they buy actual gold. So in theory, that ETF is completely backed by gold. This means that the price of these two ETFs should closely track the price of gold. Actually, it should closely track 1/10 of the price of gold. The only real difference between gold and the ETFs is the fees. And this brings me to why I like BAR over GLD. BAR charges 17.5 basis points and GLD charges 40 basis points. To me, it's as simple as that. They both do the very same thing. Why pay more? Now, just to be clear, yes, I know Will and I like him and he's helped me further understand the markets, but I'm not getting paid for him to say anything like this. It's as simple as they do the same thing as GLD, but they charge less. To me, that's a huge advantage. So if we switch to silver, well, one thing I noticed that there's not nearly as much money in silver ETFs as there is in gold ETFs. The largest silver ETF I could find was the iShares Silver Trust. They get about $4.5 billion, and they charge a fee of about 50 basis points, so 1/2 of 1%. Then there's also the Aberdeen Standard Physical Silver ETF. Their ticker symbol's SIVR. Once again, they do the same thing as SLV, except they only charge 30 basis points. So, to my way of thinking, SIVR seems to make more sense. And I don't know anybody at that ETF, so I'm going to have to branch out my network a bit and see if I can expand that for a future video. Okay, now this brings us to the next question. Which is better, gold or silver? So, people often link gold and silver together, and they talk about them as if they're interchangeable investments. And interestingly, they're really not. Broadly speaking, gold isn't a very usable commodity. Sure, it's used in jewelry and some electronics, but historically, gold has been mostly been a way to store people's wealth. Silver, on the other hand, has many more industrial uses than gold has. And ultimately, what this means for us is that silver is much more tied to the business cycle than gold would be. This should also make silver more volatile. And when I went ahead and checked the 1-year standard deviation for both SIVR and BAR, SIVR came in at about 10 and BAR came in at about 7.3. So it seems that gold is less volatile than silver, at least it has been over the past year. So this leads us to the question, are gold and silver ETFs a good investment right now? Well, based on what I've seen from a silver perspective, I would feel much more comfortable investing in SIVR if we were closer to the bottom of the business cycle, since they are in fact more closely tied to the economy. So if a recession does hit and the market does keep going down, well, silver may not perform as well since the industrial demand for silver would likely slow. This chart right here, this is a chart of silver compared to the S&P 500. And since the start of 2018, the S&P is down about 3% and SIVR is down about 14%. When we switch to gold, well, we can once again see that the S&P is down about 3% and BAR is down about 4%. Now, it looks like silver is in fact less resilient than gold. So this supports our thesis that a potentially slowing economy could spook silver investors more than gold investors. But there is something interesting about this chart, and that is that gold has been down since about March. Sure, when the market got a bit more volatile in this area, well, gold started moving higher. But why the reversal of gold prices back in the March, April area? And our answer lies in this chart. This is a chart of DXY. DXY is the US dollar index. Basically, it's the US dollar versus all the world's major currencies. So it's a clean way of looking at the price of dollar versus much of the rest of the world. And we can see that when we look at how gold did against the US dollar, we can see that they move rather opposite of each other. They move inversely. So when the dollar falls, gold will rise. And I think that this is crazy important because perhaps gold isn't a hedge it's believed to be. Well, it is, but not for the reasons that many people thought it was, at least the way I was thinking it was before I went ahead and did the research for this video. And that's because in a recession, oftentimes the value of the dollar weakens. So we know that if the dollar weakens, well, gold will move higher. So ultimately, it's likely the value of the dollar that's driving gold higher and not the recession or not the S&P 500. So to test this, I actually put together this chart. This is a chart of gold versus the US dollar during the Great Recession. And as we can see, when the dollar fell early on, gold jumped higher. Then when the dollar started to rally, well, gold began to fall. Then towards the end of the recession, the dollar fell off again, and once again, gold began to move higher. So now we know what we're dealing with as far as gold is concerned. We know that the price of silver is often tied to the business cycle. That being said, do we think that silver and gold are good investments right now? Now, personally, I'm not a huge fan of silver at this point because, like I mentioned before, I actually think that we're closer to the end, to the top of the business cycle than we are the bottom, and I'd rather wait for the bottom if we're going to jump in silver. So we already saw that the gold is tied to the US dollar, and we know that the dollar rising helps create this dip in the price of gold. But what made the dollar rise? Well, the dollar is tied to many different things, but one of the main drivers of the dollar is interest rates. And if you've paid attention to the markets at all in recent years, then you've likely heard that interest rates have been rising. Rising rates tend to drive the dollar higher. And we know that if we drive the dollar higher, we're going to drive gold lower. That explains why the S&P is down and so is gold. And this brings us full circle as to why gold does work as a hedge. See, in a recession, the Federal Reserve is unlikely to keep raising rates. In fact, they're more likely to lower rates, often leading to a falling dollar, which we know will lead to rising gold prices. So, should we buy gold for 2019? And for me, I think it makes a lot of sense to have this type of hedge in place. And any pullback in the economy or uptick in inflation will almost certainly stop the Fed from raising rates any further. This should help gold and ultimately our portfolios. So if you've been following our channel at all, well, you may have seen that we're doing a series called the Dow 30, where we're analyzing all 30 stocks in the Dow Jones Industrial Average. And then what we're going to do is we're going to take that analysis, we're going to build 3 different portfolios, a value, a growth, and a dividend portfolio. Well, with that in mind, it might make sense to consider adding gold as a hedge, as one of our positions, to see if it could help hedge our portfolios when we go ahead and build those. Now, for me, I would add BAR over GLD simply for the fact that the fees are lower. I think watching fees is crucially important. And we're getting the same thing. We're getting 1/10 of an ounce for every share that we buy. But what do you think? Should we add BAR to our portfolios? Is gold the smartest investment for 2019? It could be. Let me know what you think in the comments below. And if you haven't done so already, hit the subscribe button. Thank you for sticking with me all the way to the end of the video, and I'll see you in the next video. Thanks.